You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Wednesday, 12th day of March, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first live broadcast, that's our live training room, and that's private. Members only, and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, when Michael joins us here in about 50 minutes, he'll walk you through the process step by step, and if you sign up for the trial today, we'll get your indicators up and running today. Your trial will actually start tomorrow, but not to worry, you'll still get 5 consecutive trading days on the trial. The weekend does not count against you. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break, and then we come back for the noon broadcast, this broadcast. This broadcast, unlike the morning broadcast, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. The best way, only you'll have to do it once, go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. You can. There'll be days when you're busy, can't join live, but want to get caught up later. You can. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. youtube.com/CFRN. And it's a great way, if you're new, to get to know who we are. You can actually see how we've evolved over the years thanks to the power of YouTube. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to, but it's a tremendous resource to have available, so take advantage of it. Now, our daily schedule for each afternoon broadcast is listed right here. So we're going to head right into our daily devotional. And the topic that we're on is no regrets. We're on day 4 of 5. Today's scripture is Galatians 5, verses 22 through 24. and I'm going to share it from the Message translation. But what happens when we live God's way? He brings gifts into our lives much the same way that fruit appears in an orchard. Things like affection for others, exuberance about life, serenity. We develop a willingness to stick with things, a sense of compassion in the heart, and a conviction that a basic holiness permeates things and people. We find ourselves involved in loyal commitments, not needing to force our way in life, able to marshal and direct our energies wisely. Legalism is helpless in bringing this about. It only gets in the way. Among those who belong to Christ, everything connected with getting our own way and mindlessly responding to what everyone else calls necessities is killed off for good, crucified. That's Galatians 5 verses 22 through 24. Okay, day 4 or 5, the God of second chances. Ricky Jackson had no regrets. He was the man charged with murdering Harold Franks outside a convenience store in 1975 and was wrongly imprisoned for 39 years. Jackson was given a second chance in life, and it was one he well deserved. He can now live as a regular citizen, free to go wherever he chooses, whenever he chooses. Jackson's humility, his strength, and his willingness to forgive speak to the kind of man he really is. And life is a little sweeter now that he has been given a second chance. Think about that, 39 years locked away. And he wasn't guilty. Everybody says they're not guilty, but this guy, he really wasn't. Now, our God, the God we serve, is the God of second chances. He gave each one of us who is born again a second chance. He gave us a do-over. All our past sins have been wiped away. Our lives have been restored to fellowship with Him. And we have been given the greatest second chance to live and to live well. I encourage you to make the necessary changes to live a life worth living. Evaluate your life, identify those things that need to change, and make the changes. Grow in spiritual maturity and learn to walk in the Spirit and in faith. I encourage you to live for Jesus today, because tomorrow is not promised. Practice intentional living. Change what needs to be changed and forget what cannot be changed. Choose to be mindful of the purpose and timing of your mission. Grow in your spiritual walk and learn to abide in God, and be quick to obey the Lord in all things. Let's pray. Heavenly Father, thank you for the gift of your Spirit, who fills our hearts with love, joy, peace, patience, kindness, goodness, faithfulness, gentleness, and self-control. Help us to walk by the Spirit, bearing these fruits in our daily lives. Strengthen us to turn away from selfish desires and to live in a way that honors Christ. May our lives reflect your love and grace to the world. It's in Jesus' name we believe and pray. And everybody said, amen. Amen, and happy Wednesday. Let me give you the numbers from around the world. We'll start in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 43 points. The NASDAQ is up 252, 1.5%. S&P 500 is up 38, but the Russell 2000, or man in the street, is down 5. So we have mixed markets. You gotta start somewhere. We've had red after red after red, and while we like to see them all the same color, it's just good to know that there is still green possible. When you trade futures, if you have all 4 of the major indices the same color, they can be all red or all green, but as long as they're the same color, you tend to get better follow through on your trades. When the markets are mixed, it's kind of a little bit of tug of war, so you kind of want to be careful. And of course, if they're all green, that's a good thing too. So we've been all red for days, and now we got a little green on the screen, so that's nice. In the commodity basket, crude oil is up $1.47, trading 67.71 last. That's a gain of almost 2.25%, or $1,460 per contract traded. Gold is up $15.50, trading 29.3640 last. Silver up 51 cents, trading 33.66 last. For silver, that's a gain of 1.5%, or roughly $2,500 per contract traded. In the Asian markets at the close, the Nikkei posted a gain of 25 points. Shanghai dropped 7. The Hang Seng fell 181. And in the European markets at the close, FTSE up 32. The DAX up 312. That's almost 1.5%. And the CAC up 34. So that gave us a mixed day in Asia. It was a green day for the UK. And at the moment, it is a mixed Radio Wednesday here in the US of A. So let's look at the news that's shaping the world. Ukraine has accepted a U.S. proposed 30-day ceasefire deal amid negotiations with Saudi Arabia, or in Saudi Arabia. The agreement, contingent upon Russian acceptance, would halt fighting along the front line, as well as in the air and sea. In exchange, the U.S. agreed to restore military aid to Ukraine, which was cut off after a tense Oval Office exchange between President Trump and President Zelensky 2 weeks ago. The joint statement from the U.S. and Ukraine came hours after Kiev launched the war's largest drone attack against the Moscow region, killing at least 3 and wounding another 18. More than 300 drones were intercepted in Moscow and elsewhere in the country. The attack highlighted Kiev's ability to strike deep into Russian territory, despite recent setbacks in the war, disrupting train and air travel while damaging key oil processing plants. The 3-year war, think about it, it's been 3 years, has left more than 1 million combatants dead or wounded and has displaced more than 10 million civilians. The United Nations estimates that rebuilding Ukraine will cost more than $500 billion over the next decade. Former Philippine president was arrested yesterday at Manila's International Airport under a warrant issued by the International Criminal Court. Putin has one of those International Criminal Court warrants on him as well, so he probably won't be leaving Russia anytime soon. The 79-year-old was returning from Hong Kong when law enforcement took him into custody for alleged crimes against humanity tied to his anti-drug campaign. The arrest concludes the year-long ICC investigation into Duterte's war on drugs, spanning from his mayorship in Davao in 2011 through his presidency until March 2019, when the Philippines withdrew from the ICC. Official records cite more than 6,000 deaths, while human rights groups estimate the toll could be closer to 30,000. The ICC accuses Duterte. It looks like Duerte, but it could be Duterte. Anyway, let's just call him the former Philippine president. He's accused of orchestrating widespread unlawful killings targeting civilians while providing immunity to perpetrators and rewarding police officers with financial incentives. His supporters argue the arrest is illegal because the court lacks jurisdiction, but the ICC maintains that it retains authority over crimes committed before the withdrawal. And if you're planning to take a trip, bags don't fly free. Southwest Airlines is dropping its long-standing bags fly free policy for most travelers starting May 28th, which analysts say could impact customer loyalty. Only top-tier customers will retain the perk of 2 free checked bags, while some members will be allowed 1 free checked bag and others will be charged. Now, the decision marks a major shift in Southwest's 54-year history and comes amid financial pressure and changing customer preferences post-pandemic. The airline could generate up to $1.5 billion per year in revenue from baggage fees, while losing $1.8 billion in market share per a consulting firm's analysis. Southwest will also introduce assigned seating, extra legroom seats for a fee, and a basic economy fare class. Southwest shares closed up on the news 8% yesterday. In related news, Delta Airlines, American Airlines, and Southwest as well lowered their financial forecast for the first quarter of this year, citing bad weather, plane crashes, and less consumer spending. Inflation is still running hot. Little surprise to consumers feeling the sting in everyday purchases. The CPI, Consumer Price Index, surged 2.8% over the prior year in February, and the month-over-month increase was 0.2%, both measures cooling from January. Yet categories like food, medical care, and used cars remain elevated. Here's what the latest CPI report means for your household. Grocery price growth was flat in February, following a 0.5% jump in January. But even with that slowdown, major food groups are still experiencing price hikes. The big old story: eggs are up a whopping 59% from a year ago. Well, That's what happens when you kill all the chickens. A dozen large grade A eggs on average cost $5.90 in February, up from $4.95 in January, and far higher than the average $2.99 a year ago. Other breakfast staples like coffee and bacon are also up year over year. Meat, especially beef, went up. Ground beef increased 2.7%. Beef roasts grew 2.8%. Some food categories saw slower price growth. Fruits and vegetables were down 0.5%, and dairy products slowed a full 1% from January. The cost of eating out grew 0.4% from January and was 3.7% higher than a year ago. Apple is in trouble. Well, at least their artificial intelligence efforts are in trouble. The company, which debuted its Apple Intelligence platform during its Worldwide Developers Conference last year, was banking on the software to help boost sales of its iPhone and other products. But so far, the gambit has fallen flat, with iPhone sales declining year over year during its most recent quarter. And now the tech giant says it's delaying the release of a planned, smarter version of Siri. Wow, wouldn't that be nice? One of the most anticipated aspects of its AI strategy. According to Apple, the new Siri is taking longer than the company expected and should come out later this year. On top of that, Apple is still working to get Apple Intelligence up and running in China, one of its most important markets. AI is a major selling point for smartphone shoppers in the region, according to market research. And local players like Honor and Xiaomi are quickly filling the void. Apple's stock price, meanwhile, continues to get hammered. Along with the rest of its big tech cohorts, Apple shares are down 11% year to date, joining Nvidia, which is off 17%, and Microsoft and Amazon, which have both fallen 9%. You know, stock prices don't grow to the sky. And this retracement, and that's what it is, this contraction, it's so long overdue. But the good news is it's happening for the right reasons. So make of it what you will. And from Bloomberg, shares of Tesla, Elon Musk public company, have been in free fall for the last few months, but shares in his private companies aren't. Secondary market investors have sent the collective valuation of 4 of Musk's private entities up 45% since the U.S. election, according to a new analysis from trading platform Caplight, exclusively shared with Bloomberg. Caplight aggregated secondary transaction data along with other signals such as buyer interest to estimate a daily share price for Musk's SpaceX, Neuralink, The Boring Company, and XAI. Musk's artificial intelligence lab, built to rival OpenAI, has driven most of the gains in this portfolio, according to Caplight. The firm's data also shows the XAI share price increased 110% since November 5th. You know, this guy, richest man in the world, doesn't need the money, doesn't need the job. It's estimated he's lost $100 billion trying to help America get out of this mess that we're in. I've yet to find any one person, and I know a few people, I've yet to find all this fraud, waste, and abuse that's been uncovered. I've yet to find one person that agrees with any of it. I mean, go to doge.gov, doge.gov, and it's all very transparent. But yet, these paid actors, these protesters, these firebombers, scourge of the earth, you know. Maybe Tom Homan should take a day off and go round them up. And then they need to follow the money and see who's paying them. We think we know. But you never know, really, do you? Okay, let's look at the local news front. Logic 247. That's our 24/7 around-the-clock E-mini alert service. Now, this recap was done this morning at 6:30 a.m. Eastern. So, quite a bit has changed since then. Over the last 345 weeks, we have issued over 19,100 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and just a simple process we teach all of our passport holders in their one-on-one mentoring sessions. Since the markets opened this week, we've issued a total of 40 alerts. At the time Valerie did the recap this morning, which of course she'll update this afternoon, this evening, we were still waiting on the outcome of 18. Markets were basically flat overnight in many cases. So we've had 22 actionable alerts, of which so far nothing has stopped out. But it's early. It's only Wednesday. And I'm sure by the time she grinds through those 18 waiting, we'll find something there. Just guessing, because while we have had weeks at 0%, I never expect a 0% week. Because what we've proven over 345 weeks at over 19,100 alerts is that on average, as I said, 20% at the time, or 20% of the alerts do get stopped out. If you're spending money chasing the Holy Grail, the 100%, always profitable, never get stopped out thing, save your time, save your money, okay? That Holy Grail does not exist. It cannot exist. It would defy the laws of science, physics, even God. It's just not doable. Now, can you have a good day where you don't get stopped out? Sure. Could you have a good week? I guess that depends on how many trades you take. If you only take 2 or 3 trades in a week, yeah, maybe. But the bottom line is in the markets, you will get stopped out. So professional traders, when they get stopped out, they understand it's part of trading. Like breathing's a part of life. So they just move on to the next opportunity without giving it a second thought. New traders have a tendency to get stopped out, bang their head, swear they'll never trade again. You know, you've probably been through the cycle, maybe more than once, maybe more than a few times. So, anyway, that's where we are so far on the week. It'll be interesting to see what happens with these guys once Valerie gets the recap updated. Now, each logic alert has an entry price, an initial target, additional targets in many cases, and then a final trade to target. The purpose of the alerts, well, yes, you can trade them. The real purpose is to teach you how to read a chart, how to look at any chart of any market, future stocks, crypto, Forex, ETFs, doesn't matter. And along with our humble set of indicators, instinctively know what the next high probability move is, with the understanding that after your best work, best analysis, 20% are still going to get stopped out, because 20% of the time the market just does not do the next high probability thing. So what's critical is that you learn what the next high probability thing is based on the structure of the market you're looking at. Okay? If you keep it that simple, then it's pretty simple. Trading's not easy, but we've worked very hard for many years to make it simple. Trading's not easy, but it can be simple. Now, the logic alerts can come out anytime around the clock. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. But our original alert service, the concierge trade alerts, they're a little bit different. They don't come out around the clock. They're posted as a static report 5 minutes ahead of the Globex Open, when possible. Okay? And I always put a note, or do my best to put a note, in the Telegram discussion group. Expect the CTAs at 5:55 p.m. Eastern, or don't expect them at that time. I don't want you sitting waiting for something that's not coming out. Now, I would like to say that I'm going to get them out every day at 5:55 p.m. Eastern, but, you know, some days life does get in the way. So what that means is 5 minutes before the markets opened last night. Now, the Wednesday session that we're in right now started last night at 6 p.m. Eastern. Just like tonight at 6 p.m. Eastern will be the beginning of the Thursday session. Okay? So all of our members, all of our trial members had all of these targets 5 minutes ahead of the open. Silver, gold, NQ, crude, Russell, Dow, and the ES. So, with that understanding, we'll go look at the chart. Green on the screen. Ain't that something? What'll they think of next? Yeah. We'll scrunch it. Alright. So, this has been the big ride down. Look at all these red candles. Now we had this day here on the 5th, where we had a big red candle down, but closed with a little green body, but well off the high. Pretty much the step line, the black step line and red and falling have just been paired together. It's unusual. Look over here. You won't see that anywhere for any length of time. So to say that this is highly unusual is to say that this is highly unusual. Now, today price did rally all the way up to resistance times 2. The step line and red and falling. Sent us back down to the 62% fib extension, or fib retracement. These are the retracements. I haven't redone the extensions yet. I'm kind of letting the market sort itself out. So we up here now over here. Remember, this wasn't the 62% fib. Okay. This didn't become the 62% fib, this price, until the all-time historic high was put in. This goes all the way back to August 5th. Yep. from August 5th, the low of August 5th, to the all-time historic high put in on December 6th. Okay? So we're consolidating at the 62. Now, support is obviously at the low of today, the low of yesterday, and then the low of September 11th, the low of September 9th, and then we get down into this area here. But maybe, just maybe, we're starting to see a transition, a turnaround. Now, I look like that here, so we don't want to get ahead of ourselves. But it is nice to see a little green on the screen. Now, daily charts are important because it gives you a big picture view of what's happening in the markets, any market. The S&P is considered the bellwether of the indices, and that being the majority of what we trade, that's what we track, because wherever the S&P ends up, eventually the other indices will get there too. Sometimes they lead, sometimes they follow, but eventually you can count on the S&P to kind of shine a light as to where we're headed. Institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. So I encourage you to just spend 2 minutes every trading day with the daily chart of whatever it is you're about to trade before you drop to your smaller time frames. This morning, if you were just looking at your range chart, you did not know to expect resistance here. Right? Now this is Wednesday, Tuesday, Monday. Monday, you didn't know to expect support here, just looking at a smaller time frame. So those 2 minutes that you spend, whether it's future stocks, whatever, shows you, number one, what the deep pockets, the ones who actually move price, are up to, or if they're undecided, okay, and you're able to identify major areas of support and resistance you won't be able to see on the smaller time frame. Okay. Now, back here, it looked like we were going to put in a new all-time high, and we didn't. And then, once again, after bouncing off the BBC, the green line's the BBC. It stands for bull-bear cross. When price crosses above the green line, we're bullish, expecting higher prices. When price gets below the green line, we're bearish, expecting lower prices. It's pretty simple. The BBC can be applied to a daily, weekly, monthly chart, a 30-minute chart, a 5-minute chart, a tick chart, or a range chart. The results that you get will be relative to whatever time frame you're looking at. In other words, don't expect daily results off a 1-minute chart or vice versa. Now, all of the alerts, both Logic 247 and the Concierge Trade Alerts, they're created on the 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I chose years ago. And they say if it's not broke, leave it alone. So I have. The vertical line separates today, Wednesday. Here's Tuesday. Back over here is Monday. When price drops to a weekly zone, we expect support. When price rallies up to a weekly zone, we expect resistance until proven otherwise. Last night, coming out of the gate at the open, now remember these targets were published 5 minutes ahead of the open, we just flatlined all the way through the London Open. The London Open was barely a blip on the screen. Now, we did get some lift off here, and it took us all the way up to the weekly trading zone overhead, and we hit the target, the long target. Now, we spiked off that news at 8:30 all the way up here. We failed to take out that high. Okay, sign of weakness. Sent us back down to the BBC. Now the pullback, as you can see, whether you're pulling up from below or from above, the pullback holds more often than it doesn't. So you expect it to hold until it doesn't, and we know that eventually it will trade through. But it traded through and ran right into resistance. But today, again, we got resistance at the zone. Now these are the zones published typically Monday morning, 6:15 a.m. Eastern. For reasons I explained yesterday many times, I wasn't able to get them out this week till Tuesday morning, which is what typically happens when Monday's a holiday. But it was computer issues. Anyway, we got below the BBC and we dropped all the way to the zone. 55.50 / 55.55. 51, I'm sorry. And that is the lowest weekly trading zone for the week. Now, what I read to you from the discussion group yesterday, and which I posted the previous day, is that the zones this week may look a little wonky. So, I mean, here we are on a Tuesday morning hitting the lowest weekly zone and hitting it again on Wednesday. Over the past 15 years, we published the zones Monday morning, 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. And what we found over the last 15 years is that most of the time, if we hit the lowest or highest weekly zone by Tuesday morning, come end of the week, close of business on Friday, we'll be at the other end of the spectrum. Have there been weeks where that didn't happen? Yes. Could this be one of those weeks? Well, I'll tell you what, considering all that's going on, yeah. In fact, in that piece that I wrote in the discussion group and that I read yesterday, over the last 15 years, if there was ever a week where I would choose to not even publish the zones, this would be the week. But as you can see, support, resistance, support, resistance, resistance, support. So far they're still doing their job. So I guess we should be thankful for that. We didn't get to the short target because we hit the zone, the lowest weekly zone, and bounced. Okay. On the Dow. Kind of looks like the same picture, right? It's here. Look at the structure of the market. Okay, that's ES. I go to the Dow. We opened here last night, opening candle, 6 p.m. Eastern. Flatlined until about 4:30 this morning. And then we got liftoff. We hit the long target, and off that 8:30 news, econ news, we spiked it almost all the way up to the zone overhead. But actually what we did was we ran into this bearish cross. When the red line gets below the green line, that's called a bearish cross. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. And it was. Does it happen every time? No. There's very few things that happen every time in the markets. Does it happen more often than not? Yeah. If it didn't, I wouldn't even be talking about it. So when the market finds resistance, it's going to go look for support. So it came down to the BBC and sliced through it. Only three things happen when price encounters a weekly trading zone. 70% of the time will be consolidation. 20% of the time will be rejection. 10% of the time, price will slice through that zone like it's not even there on the 30-minute chart. And when it runs out of steam, it will typically retrace back to the zone it sliced through and then continue in the direction of the slice. So we took out the lowest weekly zone yesterday, again today. Now we're back above it, but we're running into the BBC, and the pullback holds more often than not. If price manages to trade through the BBC, then be aware of this bearish cross right here, okay? The area that I'd be interested in would be, something like 41,610 up to 41,650. That's 40 points. You only need 20 points to get your goal for the day. On the Russell, got it. It's so similar. Flat line, ran up, hit the zone, resistance. Resistance sends us back to support at the BBC. And then here comes that 8:30 news. And we not only hit the long target, we spiked it pretty good. So what's going on over there? Up, right there. You see where the step line crossed blue and climbing, turning it into red and falling? If I put my cursor right there where it crossed, it might be off a tick or two. Again, market structure and the use of our humble indicators. So that resistance sends the market looking for support, which it found at the short target. From there, it has now bounced up to the BBC. If it trades above it, we got a zone right here, and then the long target again. And so you only need 2 points with the Russell to get your goal for the day. So 2037 to 2039. Yeah, that might be a spot to watch for. Okay, there's just too much noise here for me. NQ, well, it looks a little different. Not terribly, but it is different. Okay, so we hit the zone yesterday, resistance, hit the zone yesterday, resistance. This is where we opened last night, sideways, 4:30. Off we go. We get to the zone overhead, consolidate a little bit, and then there's that 8:30 news pop. And it took us, okay, look at the horizontal line on my cursor, okay, and then look over here. People always ask me, how far left do I have to look? As far as you need to. Can you see that this high lines right up with that? Okay. Now, do you instinctively know that's going to be resistance? No, but what you want to know is that it is potential resistance. Okay. And then you deal with whatever happens. So we hit the resistance, came back to the zone for support, got another bounce. We actually traded below the BBC right here, and this low right there is basically this low here, which is basically this low from yesterday afternoon. So does that mean that that has to be support? No. But does it tell you that it's potential support? Yes. Okay. And it turns out it was. Okay. So we didn't make it to the short target. We've hit the long target a couple times. Now, what do we got? A double top right here. See this high and this high? So you got to break above that area, and then your next potential resistance is going to be this high and this high. That high right there. See it? Okay. crude oil. Here was the open last night. We ran up to the weekly zone, which again we expect to be resistance until proven otherwise. Resistance always sends us looking for support. Support sends us looking for resistance. Resistance sends us looking for support, which we found at the short target. We spiked it just a little bit. Buyers came in, took us back up to the zone, consolidated there for a couple of hours, and then we got a leg and a retracement and a leg that took us up to the target. And what do we got here? Nothing. See, this is one of those 20% of the time. See, I would have expected resistance right here. Okay, we spiked it. So again, over the 345 weeks, 19,100 plus alerts, we know that 20% of the time the market is going to do something other than what we would expect it to do based upon its normal behavior. And this is a perfect example of that. Now, it spiked it and then came right back. So, but we're trying to get to this next zone overhead, 67.95. Still two more zones up above that. On gold, we flatlined at the zone most of the night, popped up to the long target. That resistance, okay, sent us back to the zone for support. We reached down, we hit the short target. We almost hit it on this one. And then we had the perfect stack. We hit it. Now we're above 29.36. We still got two more zones overhead. Okay, so I'm going to just leave it here. We'll talk more about gold when I come back. Michael's going to give us a recap right now of what happened this morning in the live trading room, and then do a little live trading on the TradingView platform. Then I'll come back. I'll finish the recap, and we'll wrap things up with our good word for the day.
Excellent.
All right. Looks good.
All right, here we go. Good afternoon, everyone. Today is Wednesday, the 12th day of March 2025. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. Right, there's no credit card required for the trial. Click on that purple button, and you will be sent to this registration page. Right, on this page, all we ask for is your name, your email, your phone number. Down at the bottom, if you have Ninja, give us your machine ID. If you want to use Ninja charts, if you're not going to use Ninja charts, then we don't need the machine ID. If you're just trading on Ninja, that's fine. Just trade on Ninja. We do need your TradingView login ID though. If you're going to use charts at all, you need to give us a TradingView login ID, and you're really going to have to use charts. So get a TradingView ID and give it to us. All right. It's not that complicated. To do that, you can go here to mytradingiq.com, click on trading platforms, and follow the instructions right here for TradingView. These instructions right here. Follow those for TradingView, and when you do that, you will be sent everything that you need to get your indicators indicating. Okay? You have to give us that ID, and that's all you really need to do. We'll enable it for you. All right. We had a good day today in the room. We were right there on time this morning. We're actually a couple minutes early compared to yesterday. We're a couple minutes late. Well, I mean, I say late. I wasn't there at 9:27. I was at like 9:28, 9:29, something like that. Anyway, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, we made 357 ticks on the NQ. That was not the high of the day for us, but it was pretty close. We made 20 ticks on the Russell. That was the high of the day. 3 ticks on gold. That was also the high of the day. And 67 ticks on the ES. That was also the high of the day. So if we didn't stop out on that last trade there on the NQ, we would have been just a little better off than that. Let me see, 60 times 5 would have been over 3,000 today per contract because we had a 60 tick stop out that put us down. Anyway, it took 1 minute and one trade this morning to get to $1,000 a contract. That was one NQ 20-tick trade, and we took a total of 33 trades this morning. So on the month now, we're at $5,372. Over 3 business days, averaging $1,790 per contract per 2-hour business day. On the year, we're now at $62,855. Over 40 business days, averaging $1,571 per contract per morning session. Now, following the 24/20 blueprint, if you were to quit trading when you get the goal for the day and add 1 contract per month, 1 contract for every $2,000 that you earn, so far this year, you would have only had to work 6.5 hours. You'd be up to $10,860 trading 3 contracts right now and be averaging $1,658 per hour. That's where you would be. All right. All right. So let's now get into the actual trades. Okay, we had more trades on the ETFs than anything else. We had just a few on the gold, and once again, the gold owned us right at the very beginning, but we got back into it. Just a few trades here on the gold. We started out on this one, and that was a mistake. My first trade of the day on gold was a mistake. We were -10 on that one. And then we had a break even, and then we had a +8 that got us to -2, and then we had a +5 that got us to +3 overall. And that was it on the gold. There were some other trades. We had some really nice chop and through here. And when I say really nice chop, I mean, it's going sideways like this. And the way that the trigger works, if you get rid of the slingshot and you're just trading with the trend, that means you're above the YBR and you're only taking long trades. Same thing over here, it was really choppy. Every time it goes into the oversold, you buy the open of the next bar. Every time it goes into the oversold, you buy the open of the next bar. Okay. Every one of those worked. Every time it went into the oversold, if you bought the open of the next bar, this is the only one that didn't work right here. And maybe that one too. So 2 of them didn't work, but you would have had your goal for the day easy right there. And over here, the same thing. When it goes into the oversold, you buy the open of the next bar. It goes into the oversold, you buy the open of the next bar. Into the oversold, you buy the open of the next bar. Into the oversold, you buy the open of the next bar. That went enough to get your stop to break even. Into the oversold, you buy the open of the next bar. That would have stopped you out finally. Into the oversold, buy the open. Into the oversold, buy the open. Into the oversold, that went 7 ticks into profit before it came back down. Into the oversold, that one would have stopped you. Into the oversold, that one would have stopped you. So you would have had 2 stop outs there. But all those are the winning trades. It's not that complicated. Okay. Right here, into the oversold, buy the open. Into the oversold, buy the open. Now, I went over something else this morning. For those of you guys that were in there this morning, I'll go over it again for those of you guys that were not in here. Yes, Bob, I am. Well, I don't know about range trader. I don't know what that is. Range trader. I've never heard of that. But anyway, the TV trades, that is me. TV trades. And somebody else tried to knock off that and start another Telegram channel and all that stuff. But that's a whole separate thing. But all you're looking for in here, and this is one of the things that I had said to people this morning. When you have a leg up, if you're in a trend, the flat spots should be in the direction of the trend. If you're in a trend, if you're in an uptrend, the flat spots should be at the top. All right. When it pulls back, it should be a quick tap and then go when you're in a trend. But if you have a long leg, then you're likely to get a flat spot down here at the bottom, because when it pulls back, it's likely to do a deeper pullback. Okay. But that, I just said that to everybody this morning, so you could sort of anticipate when you're gonna have a flat spot and when you're not. You have a deep pullback like that. If it gets down to the 50% and it keeps going, you're probably not gonna wanna buy it right there. Let it go and wait and do the conservative trade when it comes out of the oversold. Okay. Anyway, that was gold this morning. There's plenty of opportunity. I only got the +3 on it, but I got plenty of opportunity on everything else. On the Russell, we didn't have many trades on the Russell either. We started out with a stop out on that one. And let's Let's get there. Here it was right here. My first trade on the Russell stopped out, minus 25. Then we had a plus 20 on that. Excuse me, I had a plus 20 on that, got me to minus 5. And a plus 25 over here that got me to plus 20 overall on Russell. I think that was about it. Doing the same thing. If you take the slingshot off, you're below the YBR. Anytime it goes into the overbought, you're selling the open to the next bar. Into the overbought, selling the open to the next bar. Into the overbought, selling the open to the next bar. Into the overbought, selling the open to the next bar. I mean, again and again and again. Doesn't get much easier than this, guys. It does not get much easier than this. There are plenty of opportunities to trade there during the break. And now we're on to the ES. Now we had a bunch of trades on the ES. The majority of the trades were on the ES today, as they were yesterday, as a matter of fact. Let me start over here and do alt and back, because there's a lot of bars to go through. So just dragging it one screen at a time would take a long time. Bob, do you have a website for that thing that you just mentioned? And I'll tell you if it's the same thing. All right. So through here on the ES, it doesn't look like we had any trades for a little while. Well, I didn't have a trade until all the way up here. Our first trade on the ES, we got 12 ticks. Then the next trade, we picked up 2 more, got us to 14. Then I made a mistake and stopped out. I think I got into it too late. It had already gone 7 ticks into profit when I got into it. So I stopped out, went back down to 4. Then I got 12 ticks right there. I was looking for it to get up to this level, which it eventually did right there. Okay, but I got 12 ticks on that. Got us up to 16, then 4 ticks there, got us to 20, then break even. Then we went from 20 to 24, then 24 to 38 between those two. Then went from 38 to 39, and then 39 to 51 between those two. And then in here, I was doing a little training. Went from 51 up to 59. Then I made a mistake right here. It had gone too far into profit for me to take the trade again. I didn't hit my stop to break even. I think that's what it was. And I stopped out, so that brought me down to 39. No, brought me down to 49. And then I stopped out again. That was just a valid stop out. Brought me down to 39. And then I started working my way back a little bit at a time. I went from 39 to 43, and then 43 to 45, and break even. Then 45. 45 to, this should be a red right here. That should be red. 45 down to 35. I stopped out. And then went 35 to 39, and then 39 to 54, and then 54 to 59. And then right here we went from 59 to 67. And that is where we ended the trading, I think. Nope, we had one more break-even trade there. Okay, but the market was really tradable today. Things were going really well, and it was really tradable. During the break, you know, again, you're doing the same thing. Gets into the oversold, you buy the open of the next bar. Gets into the oversold, you buy the open of the next bar. Okay. Gets into the oversold, you buy the open of the next bar. Into the oversold, you buy the open of the next bar. It's really not that complicated. You know, you're buying the open of the white stars when you're above the YBR. Okay, that one would have stopped you out. Above the YBR, you're buying the open of the white stars. Right? Every one of those would have worked right there. 1, 2, 3, 4, 5. That would have stopped you out. There are a bunch more trades here during the break. Okay. For those of you guys who don't know, the white stars represent where the labels would be. They only let me print labels, so many labels. Right? After that, they start taking them off. And I put these little white and red stars where the label would be. You can get the same information the label has if you click on this and you go to data window. It's right over here on the side. That information is actually there on every single bar. It's not just on. I never did use just that, Bob. Do the red and blue dashes on the long and short indicator mean anything? The red and blue dashes. What do you mean, Dan? Red and blue dashes.
He's talking about on the YBR You know, where you've got the little spotter
Oh, on the
band.
YBR. Okay, yeah. Okay, that. No. That doesn't. The YBR. We created this YBR 10, 15 years ago.
Many years ago.
And yeah, it's a very long time ago. And back then we're using a different slingshot. I'll show you what we were using back then. Okay, we were using this slingshot back then. And what that represented was something else that's not even in this slingshot right now. If I go in here and I turn on, I forget what it is. I think it's the S2, S1 slow, maybe something like that. There's some combination of things in here that had to happen to make that be what it is. Oh, you know what it was? It was also the BBC. It was a pullback. You had to have divergence down here and a pullback. The price action, it was some price action thing. Pullback to the BBC or something like that, the MA1, where price was in between here and the MA1, and you had divergence. That's what it was. But it was something that was, you know, from 10, 15 years ago. So you can ignore the dashes in the YBR. Okay, the YBR is just there to give you an easy look at the trend. If you're below it, you're selling. If you're above it, you're buying. Okay. Now, not so long ago, we had other stuff that we used for the trend, and that would have been that, and that, and that, and that. Determine the trend. All right. If you could see all four of them, you had a trend. If you couldn't see all four, the trend was changing. If you could see all four, you had a trend. If you want to keep using this, you know, when you can't see all four of them, that's when you're gonna have, you know, you're gonna be in chop usually, and you have some pretty good results using the slingshot. I'm using the reverse trigger. But when it's spread out like that, you're trending, and you can basically see, you know, when it started to trend right here, it flipped over to the top of this. When it started to trend right here, it flipped to the bottom. So it's just an easier look at the trend, is what that is. Oops, sorry, wrong thing. That is in here. Okay, over the years, we've had many different things, always trying to make it easier and better and simpler. And really, this is as easy as it's ever been. You know, when you're below, you're thinking shorts, and you have everything down here telling you precisely where to enter. And then you have all this stuff that happens after the fact telling you what you could have or should have gotten out of each trade. But yes, that's what those represent. Now I think about it, let me put this back on here. I'm pretty sure it had to do with the MA1. When it was the MA1 and the slingshot together, there was, let me just see if I can put this back together in my mind. I think I remember what it was. If you had divergence in the slingshot, there was something about the slingshot, but you had to have, this was in between here and here, and the slingshot was suggesting it was going to go down. Okay, that's where those came from. Like right in here, you would have some sort of divergence. It mustn't be this divergence that I was talking about. That had been some other kind of divergence. But you had this in between the MA1 and the YBR, and it was something down here in the slingshot was suggesting it was going to go down. That's how it turned red. And over here, the same thing. The price is always going to be in between the MA1 and the YBR when you get one of those. Okay, and there was some kind of divergence thing that the slingshot played into back in the day. That's what they came from. You don't really need it anymore because we have more precise entry techniques now. You know, we've evolved over the years. Before we had TradingView, before we programmed all this stuff and did everything with TradingView, there were actually a lot of limitations to things that we could do. You know, like you couldn't put a label on a bar like this. You could put labels on, but they wouldn't, using range bars, because there's no time element associated with it, you wouldn't be able to place it right at the top of the bar or anything like that. It didn't have that kind of functionality. But TradingView does, the Pine script language does. So it really opened it up for us, the stuff that we're able to do and create. Anyway, that was the ES. We had a bunch of trades on the ES, and we ended up with plus 67 ticks. right? And the NQ, we didn't have that many trades on the NQ, but we had some really good ones. We did stop out a couple times. In here, let's see, I was doing some training in there, and here we go. All right, so we started out here with, on the NQ, plus 20. That was our very first trade of the day right there. And I told you it was a little bit early. It was at 9:25. We got plus 20 on that, and then I messed up this one right here. I should have had my stop at break even, and I didn't. And we got minus 60. That put us down to minus 40 overall. Then we had a plus 75. That got us to 35, and another plus 75 got us to 110. Break even, then another plus 75 got us to 185. So those plus 75s just add up quick. Then here we had a plus 5, got us to 190. Then we didn't have anything for a little while, and over here we had another plus 75, got us to 265. Then a plus 2, got us to 267. Then a break even and a plus 75 got us to 342. Then a break even and a plus 75 got us to 417. And then a stop out brought us back down to 357. And that is where we ended it. But the same stuff works here. Okay. If you're above the YBR, just looking to go long at the open of the next bar. All right. If you have a deep pullback like this, if you have a big leg up, then you have a better chance of actually having a flat spot if you have a big leg up. All right. If you have a smaller leg like that, you have a lesser chance of having a flat spot when it pulls back. Okay. Anyway, all the same stuff. And you can see there were plenty of opportunities in here to take trades and get your goal for the day and then get out of it. Right. So if you have not taken a free trial of this, let me go and do that right now. If you've not taken a free trial, go here to mytradingiq.com, click on the purple button. No credit cards required for the trial. Click on that purple button. It's going to bring you to this registration page where only asks for your name and your phone number. And down here at the bottom, if you have NinjaTrader, give us your machine ID. If you're going to use Ninja charts, we don't need your machine ID otherwise. And you need to get TradingView charts, right? If you don't have TradingView charts, you need to go get them. Follow the instructions on our webpage right here under trading platforms. Right here, TradingView. Get TradingView, give us the ID. The ID that we need when you're looking at your charts, it's going to be up here in the upper right-hand corner. There'll be a little symbol up there or something with your initial maybe. Hover over that, it's going to give you what you need. Would I consider a momentum indicator? Not really. I would consider it more of a pivot indicator, Tim. Okay, momentum is something that gets you in once you're in the flow of it. You could say it's a momentum indicator if you're taking the conservative trend trades, right? In that case, it would be. And what that is when it comes out of the oversold instead of when it goes into the oversold when you're above the YBR. Okay. In that case, you could consider it a momentum indicator because it's jumping back in with the momentum of the market. But when you do it aggressively, when you buy it when it goes into the oversold instead of when it comes out of the oversold, or when you buy it, sell it when it goes into the overbought instead of when it comes out, you're counting on it being the pivot point. Okay. So the ES has a trade right here. Something else had a trade there too, I thought. The Russell kind of has a short. The ES already had its long. It went 7 ticks into profit and then a little bit more. So it's late to do anything with that. We're above the YBR, so we're really only interested in the long trades here. And we're above the YBR on the Russell too. So since I don't have the slingshot going down here, that means I'm trading with the trend with the YBR. Okay. So here's the ES starting to run. There's 8 ticks. It's not quite 12, is it? 750. I guess it was. That was the S running right there. Now over here on the NQ, we need this to get down into the oversold. If it gets into the oversold, we'll simply buy the open of the next bar. Okay. That's all we're looking to do. And none of that happened right here, or right here, or right here. So we just have to wait a minute. Okay. What time is it? 1:21. Man, where does time go? It's just been flying by on me lately. So I have my new computer almost all set up. I got to make a video on how to set up Sierra charts on that computer when I set up Sierra charts. And then I think I'll be ready to move over to it. Did you know that Microsoft 3D Paint is no longer available? I canceled that on November 4th. I use that a lot.
No, I didn't know that. Did they replace it with something new?
No, they didn't. There's a couple other things that they have, but I got to try to figure out them. I don't know why they stopped. But I mean, it was a pretty slick tool. I guess there's some things that weren't really intuitive about it, but I mean, for what I used it for, it was pretty cool. But I guess there's got to be something else out there that can do the minimal things that I was doing. All right, so we're waiting now for an opportunity to go long on one of these markets right here. Okay, if I had the slingshot on, we could look for counter trend trades on each one of these markets, right? If I had the slingshots on there. And we would have had none. None of them would have given us a counter trend trade. So we're just waiting right now. So from a daily perspective, it's not kind of daily. Let's get a 4-hour chart. Okay, a couple of days ago, we were saying we expect the ES is going to drop down to 5,600 and then go through it and get a bounce. And so it went through it and it bounced all the way up to 5,650. Came back down, bounced again, but now the bounce is not quite as high as it was the last time. So what we're establishing is a channel. Lower highs and lower lows. That's what we're establishing. That's Dwayne's stuff, though. Bigger picture stuff. I'm just noticing it right now. That's all.
Michael, they say that Microsoft Paint in Windows 11, your new computer has Windows 11, right?
Yes, it does. Yep.
The new version of Paint in Windows includes, this is what Microsoft recommends as an alternative. There's GIMP, there's Paint Z, and then there's Microsoft Paint. The new version of Paint in Windows 11 includes AI-powered tools for editing images and creating art.
Okay. Well, I didn't look at it too hard. I was still trying to figure stuff out. This is a long trade over here in the gold. But thank you for checking that out for me.
Sure.
I will have to look at it when I finally get all the way into it. And I'll probably do that at some point today. Hopefully tomorrow I'll be using right here. What you're looking at will be my new computer. Because, you know, earlier when I went from a 50 range to a 100 range, and it took so long for that to happen, and then to go back to a 50 range, and it took so long for that to happen. That is like in a second, a fraction of a second, a new computer. It's pretty slick. And I have it moved around a little bit more big space again. All that. I have it doing 2 monitors over here. And I think it's gonna be good. It'll be good. Oh, I totally forgot to put that gold trade on. Crap. Here it is. We're going to break even on the gold trade. All right. +1 tick. It should get up to right here at 46.8. Right here at 46.8. When it gets up there, I'm gonna trail my stop really close. Okay, like this. Now you see the reason I'm doing that is because right here it should meet some resistance right now. All right, so I got my stop right now at plus 7 ticks. Is that right? Yeah, plus 7 ticks. It should meet some resistance when it gets up here. So I don't want to lose any of the profit that I have. Plus 8 ticks. Now if it shoots through it, just took me out with 8, but if it shoots through it, that'd be great. But where's it going to go? The next level up was just there at 47.3. So I get 8 ticks out of that. 8 ticks on gold with 10 contracts is $800 for those of you guys who don't know. There was a trade over here on the NQ that I missed. That went 41 ticks in that bar, and I don't know if it went the other 30 ticks in the next bar, but probably 86 up to 95. 86 up to 95, that's 9 times 4, 36 ticks. Yeah, would have given you a whole 75 right there if you'd have gotten into the right spot. But I missed it. All right, 7.3 is what I said a minute ago. 7.3, and it's gotten all the way up here to 7.8. So we'll see where it goes from there. What is that blue line? I wonder what I did. Oops, the ES has another trade right here. The ES has a trade. Okay. So right here at the open of this bar, right here at 622. 622 was a spot to get along on that. Right. I didn't quite hit 622. I hit 623, and I just got out of break even. But from 622, if you get in there at the right spot, and it went down one more tick, so you had plenty of opportunity to get in there at the right spot if you're focused on it. It's so far run up to 624.5. So 10 ticks. 10 ticks was available on that one. The NQ had 75 ticks. This had 10 ticks, and we got 8 ticks out of that. I'm just giving way more than 8. All right, what time is it now? 127. Yeesh. All right. So now we need pullbacks to get into the oversold. So what we were looking for on all of these was for the blue to get into the oversold by itself. And every one that did get into the oversold by itself gave a winning trade right there. That one did, that one did, and that one did. Doesn't get much simpler. See, if I take off the slingshot on all of these and we just put the trigger down there, just using the YBR with the trigger. You can do that all day long. And the little bit of nuance that you need to understand is really not that much. You know, you just need to understand the way the price moves. And price always moves the same way. So once you figure it out, it goes up, it goes down. The flat spots happen on the long legs. So if you short down here, I mean, if you long from this spot right here, that should be something like this, where you long. And then when it goes up and it hits the top like this, and it keeps going up, that's where the flat spot happens. So the long legs like this one is going to get you a flat spot. And then if you have a really long leg, then the pullback is more likely to give you a flat spot because it's going to be a deep pullback. So it's going to go down to the bottom. And then as it continues down to the midpoint of the pullback, it's going to go a little more down here at the bottom. You see? And then the next leg up, if you do the conservative trade and wait for it to come out of the oversold, you do the next leg up, then that should be a flat spot at the top again. Okay, this stuff is not complicated. All right, well, I run out of my time. Sorry, don't mean to be preaching to you. I guess I do. It's kind of what I'm here for, isn't it? To show you this stuff. Anyway, with that, let me go here and say, if you have not taken a free trial with us, go here. If you're not taking a free trial, go here to mytradingq.com, click on the purple button. There's no credit card required for the trial. Click on that purple button, and it's going to bring you to this registration page where all we ask for is your name, your email, your phone number. Down at the bottom, give us your trading view, login ID. All right, we need your login ID. We don't need your password, just your ID. Give that to us, and we will get your indicators indicating for you. All right. that is it, guys. With that, I will pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep, I'm ready.
Excellent.
Okay, recap of the morning session.
Today, it took 1 minute and 1 trade to get to $1,000.
Good job.
Thank you. Thank you very much.
Okay, guys, we'll pick up where we left off. Gold. Gold still trying to make it to the zone overhead at 29.54. We still got one zone up above that. We opened last night and then we just consolidated at the weekly zone. And then here we made that pop up that we saw in all the other markets at the same time. And we hit the long target. Back to consolidation. Long target on this candle, short target on this candle. And then we had the perfect stack on the way up. That's when you have price, the step line, blue and climbing, and the BBC. Now, the step line has gotten directly above blue and climbing. Okay, that's the first thing that happens before the step line crosses blue and climbing. So, if we continue reaching up to the zone, all is well. However, this candle has 28 minutes left in its lifespan. But if we consolidate sideways, what's going to happen is the step line is going to move to the right side of blue and climbing. And when that happens, typically you'll see a retracement back to the BBC. But this looks like it has the potential, if it can take out this high at 29.48, the high of this candle is 29.48. Okay, but we didn't close at 48. Okay, so this candle could run, and then remember, 70% of the time when price encounters a zone, consolidation is what you get. 20% of the time rejection, 10% of the time the slice. So this could still make it to the next zone above. It really could. Now, if it stalls out here at this 29.48 area, I mean, we've kind of been locked in this area for an hour and a half, but until the step line crosses, a trade like 29.50 up to 54, that would be $400 per contract traded. Silver, last market. This is where we opened last night. We dropped to the zone, consolidated, reached down, touched the BBC. Support sends the market looking for resistance. We traded through red and falling, which was kind of interesting. But this high right here, you see where the step line crossed blue and climbing? Okay, that's right where the top of that candle is. So that sent us back below the BBC, but we never really lost touch with it. We never actually pulled away from it. Once red and falling turned to blue and climbing, then it was a brisk move up. Well, 1, 2, 3 30-minute candles, hour and a half. But here's the deal. You only need 2 pennies in silver to get your goal for the day. This candle opened at 37 and ran all the way to 50. That's 13 pennies. That's $650 per contract traded. So we spiked the zone at 33.63. Still one more zone up above. Here, see right here where blue and climbing got directly above price, became resistance, sent price back to the top of that long target. As we've talked about, when price trades through a long target or a short target and then pulls back, that target will often become, in this case, you can see it became support. And so High of the day so far on silver, 33.79, and we're currently at 33.78. So we can take this out. The final highest zone for the week is up here at 34.50/51. And again, once the zones are published for the week, they're carved in stone. They do not change in any way whatsoever. One last look at the daily. We still got some green there. Okay. Now remember the obstacles that have to be overcome. We already ran up to the step line in red and falling during the session and got rejected. But the market looks like it wants to make another run at it. So there's so many obstacles that have to be overcome. This. Right there. And then the big one, the 38% fib retracement. Now the 50, that's a big one too, but then you got the 38. And then you finally make it up to the daily BVC. Now we know the pullback holds more often than it doesn't. Okay. And I would suspect that if the market can muster the strength over the next few days to get back up here, we're going to probably find resistance initially. Once we overcome the daily BVC, then this bearish cross right here, where the red line gets below the green line and led to a very extended move, that should be like a brick wall the first time up. Okay, that is so reliable. Now it may be a while before we see 60.52, call it 60.55. No, let's be conservative and call it 60.50. It may be a while before we see those kind of numbers, but when we do, this will still be valid. If it took 3 months or 3 years, that would still be good resistance. That's how market structure works. To become a member, send an email to support@cfrn.net. In the subject line, just put, "I would like to become a member." In the body of the email, put your name, your phone number. We'll send you an email that explains what it means to become a passport holder and provide you a link that you can click to become a passport holder. You're going to get 2 hours of live training in an interactive environment every trading day. Right there. That's why 9 out of 10 new traders fail, because they don't have a teacher. Oh, they watch videos, they took some course, they read a book, and there's nothing wrong with those things. Okay? But they're no replacement for a living, breathing teacher who's taking off trades live in real time while you trade along in your demo account to learn the strategy, and all of your questions are being answered. 2 hours of that every trading day. Now, on top of the interactive group training you get every day for 2 hours, you have access to private one-on-one mentoring. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets, all time frames. Price flows the same across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, doesn't matter. Support to resistance, back to support, back to resistance, over and over again and again. That's why it's so important that you learn to read the chart, as I went over in depth at the beginning of the broadcast, because you need to know where to expect potential resistance, where to expect potential support, and be able to identify the windows of opportunity that lie between the two. Okay. You'll also get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're published every evening. Monday mornings at 6:15 a.m. Eastern, you get the weekly trading zones, and you're able to attend the members-only workshop every Thursday night at 8 p.m. Eastern. And you get the golden key that opens the private channels in Telegram. We got public channels, we got private channels. But once you become a passport holder, you have access to everything. Everything a trader needs, all under one roof at one low price. True story. And with that, we're going to wrap it up with our good word for the day. Yesterday we talked about the breaking process, part 1. Makes sense that today we would do part 2. Psalm 51:17. A broken and contrite heart, God, you will not despise. Brokenness leads to blessing. To receive a double portion of the spirit of Elijah, Elisha, who was a farmer, had to break and burn his plow. To demonstrate her love for Jesus, Mary had to break open her box of costly ointment and pour it over him. To defeat the armies of Midian, Gideon's 300 soldiers had to break their pitchers, let their light shine, and make themselves a target. The truth is, God has to break each of us in different areas in order to use us. What areas? No, bad habits, stubborn wills, inflated egos, evil thoughts, crippling fears, secret prejudices, misguided ambitions. The list, it's endless. If you're facing east, you won't go west. So God has to turn you around. Sometimes that requires discipline. And it's you, not God, who determines the length of that discipline and the extent of it. Hebrews 12:11. No discipline is enjoyable while it is happening. It's painful. But afterward, there will be a peaceful harvest of right living for those who are trained in this way. If you're a parent, you understand this. One child will collapse in tears, whereas another one will defy you. God will do whatever it takes to break your habit of self-sufficiency. Paul writes, "Now may God sanctify you entirely, and may your spirit and soul and body be preserved complete without blame at the coming of our Lord Jesus Christ." 1 Thessalonians 5:23. Notice that your body comes last in order of transformation. As a regenerate spirit, living in an unregenerate body, you will always be fighting the flesh. What's the secret of victory? Brokenness and surrender. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310.